Welcome at TaxBox. Thank you for joining us for this TaxPlanner support video. This online video is aimed at assisting our existing TaxPlanner users with a new look and feel of our 2020 version, as it does differ quite a bit from our 2019 version. Also, for our non-TaxPlanner users, we do have a demo version that is available for 15 days. The support video will assist with navigating through the system seamlessly with the help of the user manual. Gert Broden, the presenter of this online video, is a tax administrator at Finsolve, our accounting company. He's only able to show you one screen at a time, which will be the TaxPlanner screen. It will be easier to download and print the user manual as reference guide, as he will be referring to the user manual when explaining the features of the TaxPlanner software. A user manual is embedded in the software and can be accessed by clicking Help in the main interface, or you can download the attachment that has been sent to you on the GoToWebinar control panel on the right on the dashboard. So what is TaxPlanner? TaxPlanner is a software package for the calculation of your client's individual tax, not company tax, individual tax, with a complete record keeping per client in the database for the progress and status of their tax returns. Accurate and detailed reports for each calculation within the system according to legislation, providing the following and many other features: provisional tax payments, the RP6, assets and liabilities, all income and deductions. You can also log time against the client file for billing, professionally designed reports, all coded for SARS e-filing, as well as standard letters to SARS and clients. With our SARS interfacing now approved, the new TaxPlanner 2020 release version 20.03b has a SARS e-filing submission option embedded in the software, whereby you are able to submit your client's income tax returns straight from your TaxPlanner system to e-filing. No more double capturing, as the information you provide in the TaxPlanner software populates automatically on the return. The TaxPlanner 2020 features also include a link your tax practitioner profile directly between SARS and TaxPlanner, import client information directly from SARS databases, process client information and prepare for submission, no more recapturing, and then new tax profile creation, provisional tax, IT12, all directly linked to SARS. Easy to understand user manual also included in the application as mentioned. Should you have any support or technical queries, please forward them to matthew@taxbox.co.za, and Matthew is MATTHEW @taxbox.co.za. Over to Gert Broden.
So if you look at the screen, this is the main application screen that you will be actually using. So there's a toolbar menu for various menu shortcuts and reports on the top. The control button switch between client's profile information, capturing and tax payment fields. The display of the selected tax year that you can actually choose, and many more. So if we go to our first question that we want to know on page 8 is how to add a specific taxpayer or your first taxpayer on the application main screen. I just actually want to inform I'm gonna go and create a dummy entry or client so that I can actually just show you all the implications, and let's say that what the customer received for the specific year. So it is actually fiction numbers as well, just for example, to be used actually for this exercise. So if we look by adding, editing, deleting a taxpayer, you will see on your main screen Under Show Deleted, on the right-hand corner, there's a tab with 6 full stops or dotted. And if you click specifically on that tab, and it will bring down a drop-down box which will indicate Add Taxpayer, Edit Selected Taxpayers, Delete Selected Taxpayers, Practitioner Profile, as well as Link Practitioner Profile. Now, the bottom two is actually with the SARS interface, which we will cover a little bit later. If you have finished with all your clients' tax returns that needs to be imported into the SARS interface. So in this case, we are only going to add a taxpayer for now, and you'll actually see that there's a new pop-up screen that will come up with general contact info, tax info, and employer details. Very important, the fields in red must actually have to be completed, and the others is actually just optional. So in this case, let's work out a surname. Let's say it is Price. So, and his name is Mr. Peter Price. So initials is P, title is Mr. And the ID number is actually very important, as this actually shows you how the age of the specific client, due then the rebates, how to calculate the rebate. If it's over 60, the person is over 65, the extra rebate of 7,000 will be included in the calculation. If the person is over 75, the other additional rebate or tertiary rebate will be in the calculation as well. So it is actually very important for the ID to be included. So in this case, I'm just going to put in an ID just to show you. Automatically, your date of birth is going to pull through. Passport number is not necessary because you've got your ID number. Language preferred. Marital status, you'll see a drop down as well. It's exactly as what is listed on SARS's IT12 when you are completing it. It's married, single, or divorced. And then let's say this Mr. is married, it will automatically bring, are you married in community of property or not? If you don't click the field, you are automatically seen as married out of community of property. This actually, as all know by now, is also very important when calculating rental income or actually interest received, whereas if it's in community of property, you have to divide the two amounts received, and both person, you and your spouse, is taxed on just half of it, 50%. That's why if you say in community, you can put in your spouse's details. Then we go to contact info. If this is not necessary, you can put it in for safekeeping and for your own record for the client. So it's not compulsory. You can put that in. The next tab, which is tax info, which is actually very important. The tax year, which it relates to, the occupation you can put in, which very important is your tax reference number, because that is the number that your profile on TaxPlanner links to the SARS e-filing profile that they've got. So in this case, I'm just going to use 1, 2, 3, 4. And please remember the /, otherwise they won't be linked to each other. 5, 6, 7 /89 /0. So you just insert the specific taxpayer's tax reference number. As I mentioned, it's very important. And that is actually the only very important details on this tab. You can actually just complete the other fields as you wish for safekeeping or just to keep it on record for your specific client. Employer as well, if you want to insert the employer's information. And then we say save data and close. So on your column on the left hand side, you'll see now there is a Mr. Peter Price highlighted in the specific column. So to actually starting to capture the details of this Mr. Peter Price, we are going to actually highlight it, and then we need to actually capture the income which is listed on page 10, capturing income. So if you look at the tabs on the top, there is tax data, tax captures financials, and tax paid just underneath taxpayers. So we're going to say capture income in the financials. So then a screen opens which will show the detail of Mr. Peter Price, financial detail. And on the top where it says source documents, we're gonna put in a first application or company, which we will say add specific company, and we're gonna say he's working for exclusive builders. If you, this is now where you have a specific IRP5 that you have to insert all the details that's listed on the IRP5 issued. So if you want to put in the certificate number, you may. It's not necessary. It won't affect the outcome and the calculation of this specific return or calculation. What we normally do, well, the more information you want to put in was probably the better, but in this case we're just going to use exclusive builders. So we're going to say okay, and you'll see in the source document there's now a new line item which is exclusive builders IRP5. So you are aware now that all the income and deductions that's listed in the specific fields are actually relates to exclusive builders income. Now in the IRP5 that you receive and normally have in front of you, you actually get normal income. For example, we'll get back to when it's commission or independent contractor. So you know, see that it's actually code 3601 more or less. So a new item needs to be added. In this case, every single line item you have to add in the specific block: income, deductions, tax, or other, as it's not automatically pulled through and there's not an option in the specific block to actually put the line item in, because it will give you some options. So if you add in income under code, on the drop down box, there you'll see is all the different income types that actually can be associated to income. So in this case, we are going to receive only income, salary, and wage. That's taxable. So it's code 3601. However, that code will be listed on your IRP5 that you actually have in front of you when actually calculating this return on TaxPlanner. So the description will show income taxable, and in this case, Mr. Peter Price have received 200,000 Rand for the year. So automatically when you save, it will appear as income 3601, that's taxable, and now you haven't inserted the tax yet. So you'll see on the right hand corner, Mr. Peter Price, he received 200,000 Rand, and on that 200,000 Rand, his tax for the year is 36. However, the primary rebate is 14,220, and he needs to pay 22,000 Rand in this tax year. However, we haven't put in, it's just for record keeping now, just to indicate. So now we are on page, let's work through it systematically. So on the next working, it's how to the retirement fund contribution. However, let me just show you, you can actually add, let's say, more. The specific Mr. Peter Price had, let's say, commission of 20,000 Rand for the year, and another line will actually appear which will indicate 20,000 Rand, and his taxable normal income will actually be increased by 20,000, and now he's actually earning 302. So that is also, and to get back, let's say you made a mistake by saying 3601, which is the taxable income, is incorrect. You can just click on and highlight it, and then you can say edit. And let's say you haven't made a mistake and it's not 200,000, but it should be 2 million Rand. You can just enter, and then automatically it will generate, and the calculation will then be amended by myself. And then again, if let's say the commission shouldn't be there, you can just press the delete button. It will ask you, are you sure that you want to delete it? And you just say yes. Okay, so now if we move on to the next, I just want to actually do the deductions. Let's say, for example, that you have received a medical aid. We actually write on the description that you also received the certificate from the specific medical aid, let's say Momentum. And this information is very important as well, as SARS require on the IT12 that the medical aid as well as the membership number should be inserted. So it's Momentum, let's say the membership number is M123456. Your taxable income is 2 million rand. Date of birth, that will pull through from the previous one. So in your tax contribution to the medical aid, you on your certificate it states it's 120,000 rand. That's because your dependents, you've got 5 dependents, and as you can see, section 6A, the credit already calculates for the specific calculation, and it's not necessary to go and work out what is the rebate for every single dependent in the medical aid. Now, if you look at just one line on the top, it says dependents and contributions, which there's a box that you can click, and that is if it was for the full year, the values are the same for all months. You just click there and it pulls through automatically. So you'll actually see then there's a tax rebate of more or less 15,000 rand that can be deducted on your section 6A medical credit, and that will be taken into consideration when your calculation for tax will be effected. So if we get back to the total contributions, that is the amount on your tax certificate. Now your employer can actually also provide you with some benefit for your medical aid, and let's say he said he'll pay 80,000 rand towards your medical aid, then automatically the employee also the only amount is 40,000 rand that he actually should pay out of his pocket. Now we go on, also still at medical aid. On your right hand corner there it says if there's disability, if you've got the client with disability, physical impairment, or other medical expenses that's not claimed on your medical aid, so out of pocket expenses. So in this case, let's say for the amount of 120,000 rand contributions to a medical aid, it seems that it's quite a good medical aid, so no other medical expenses were paid out of the pocket. So as you can see, the fringe benefits 80,000 rand. Your 6A credit is 14,000 and the deductible expense is 0. So we're going to save it, and that's the information that was listed on your medical aid certificate. Sorry. So you'll see that your medical fringe benefit of 3810 has pulled through from your calculation that you actually selected on medical. Your deemed medical contribution is the 105. Just want to know. Just gonna check something. Anyway, so we're gonna work, and that is all. That all information is all on the specific IRP5 listed that you received from your employer, which in this case is Exclusive Builders. And Under other, you'll see that the 4474, the employer medical contribution, is listed, as well as the tax medical credit of 14,000 rand, 964 rand, which it automatically calculated for you, will then be allocated to the tax field. So if we actually look at a retirement fund contribution, which is also included, so at the bottom of your main screen, there's a retirement deduction. If you open the retirement contribution, it will give you an option of, have you contributed to a pension, provident, or a retirement annuity. Now, let's say in this case, this specific Peter Price has contributed to a RA as well as a pension. You have to actually then add 2, because it only indicates that one can be issued once or issued at a time. So let's say the RA, for the description, it is Old Mutual that he received money from, and also as SARS request the policy number, which in this case is 987654321, listed what SARS requires. So a fringe benefit, that is of course if the specific employer have given an contribution. Let's say the employer gave a contribution of 1,000 rand and the taxpayer's contribution is 50,000 rand towards his retirement annuity. Now, if you look at the calculation on the right-hand side, you will notice that total contribution is under 4006 is 51, which will be taken into consideration when your tax calculation has been done for your taxable income, and then 1,000 rand under employee contribution that will be allocated to specific blocks under other or income. So we're actually just going to save it, and then you'll see the RAF under deduction for Old Mutual has been automatically pulled through. The 3828 RAF Old Mutual, the 1,000 rand of income that appears of the company, which will also be then deducted under other, so that it balances out. This actually will appear on the IRP5 that you received from the employer as is. And now I just actually want to edit the specific income just so that it's not 2 million rand. Let's make it 200 again for this example. And as you can see, the normal income now is 200,000. There's a fringe benefit of 80, which is your fringe benefits, medical, no, not medical, your pension or RA fund, and that will amount to 81, which the deductible is 51, which you actually occurred. So the taxable income is 230 at this stage. Now, we actually, let's say, received a travel fringe benefit as well. and we're gonna just add that specific code. You can just look for there's a travel allowance 3701, which will also, as I mentioned, it is on your IP5 that you received from your employer. This specific Peter has received, let's say, 24,000, which is 2,000 Rand a month travel allowance. So we say save. And now the taxpayer can actually claim against the travel allowance, which is the 24, to reduce his tax. To do that, we are going to the tab that says travel deductions, and this screen appears. As you can see, under travel expenses claimed, allowance received is 24. So that amount automatically pulls through from what you have in your information listed in the face of the program. So description, let's say you are driving a Toyota, then there's actually options if there's more than one vehicle that you are driving or the company have that you want to claim against. 1, 2, and 3. So we actually just have one vehicle. Description on that vehicle is a Toyota Hilux. The make is a Toyota again. Model Hilux. And year model that you bought it is a 2012. Registration number is brilliant. VP. Date acquired, it doesn't really matter what date you actually bought it, but you can put it in if you would like. Let's say I bought it 1st of August 2014. Cost price of it was 250,000 Rand. And now all the information that's required under vehicle details has been inserted. We then go to running cost, and here they ask for opening and closing kilometers. Just bear in mind, if you want to claim against travel allowance or any allowance relating to travel, you have to provide a logbook for SARS, otherwise they won't allow the specific deduction. So for this year, the opening kilometers were 249,000 kilometers, and I've driven to 304,000 kilometers, which then a distance travel of 55,000 kilometers for the specific year, of which business is 40,000 Rand. 40,000 kilometers. So automatically the calculator works out, relating this information, how much of the deduction it will be able to claim. Fuel, repairs, license, other wear and tear relates to actually if you are traveling expenses incurred in the production of income. It's not as sore to actually put that in when you are claiming against the travel allowance. So for instance, I just want to double check something. Okay, if we actually said we traveled 40,000 business kilometers, and then in the top right hand corner it will indicate the deductible amount for this entry, which is 24,000 rand. Now if you only have driven 5,000 kilometers of a 55 business, you'll see you can only claim 18,000 rand towards your travel allowance. So this works out automatically the amount of travel allowance that you can claim for on SARS. So in this case, 40,000, the kilometers is for business, and that 24,000 rand, which is your travels allowance, you can actually see that it's quite low. So if you want to increase it, for example, you can do that as well. But in this case, we're using that. So we're going to save that. And you'll see the 37, the Toyota under deductions 4014 will actually be inserted for an amount of the full 24,000 as calculated by the tax calculator. So the next thing, medical aid, let me just, interest and dividends actually also that you can receive. You use your drop downs at the, let's say, middle or right hand corner of the middle. So interest and dividends received, a pop-up block of a drop will appear, which you can actually choose local interest, local dividends, foreign interest, or foreign dividends. So in this case, you have received a local interest received from Sanlam. And please remember, we normally encourage people to rather get all the documents, because for safekeeping you have to do and keep SARS's documents for at least 5 years and get the information from that to complete the tax plan calculation to submit to SARS. So we received local interest from Sanlam. Investment type, you can just put investment, doesn't really matter on that. The capital amount that you invested, let's work on 30,000 rand. So the self means the total interest that you received on the 30,000 rand. That will also be indicated on your IT3B tax certificate, which you then would have requested from Sanlam, and that is an amount of 25. So we just save it, and you will see an amount of local interest will appear under income for 4201. And let's say another interest or dividends, we want to add a new one, but now we actually want to insert a local dividend. If you choose a local dividend, you'll see there's under investment type, it appeared a drop down box with the initial REIT. As well, if you look at the drop down box, there's company. So underneath, or shall I say, on your certificate that you've received, you go through all the specific amounts that you received from Sanlam, which right will be under one of them, and you'll insert the amount on the specific drop down as shown here. So capital amount, let's say, yet again, it was is 150. As you see, there's an option for print, cancel, or save. So if you see you made a mistake, you can just cancel the specific item and print it, save it. Let's just print it and see what it provides us with. So you'll actually see that for the investment income report, this is how the income reports looks. It's normally a report that actually goes throughout looking the same for every single option. So you can see this, there's a taxpayer interest listed in for 25, the capital amount is 30, total interest earned is 25. However, there's an exemption of 23,800. So you see there's no taxable interest in this instance. So we just actually close this one and we save it again. And you'll see the local dividend will appear on your income as well. Okay, rental income. Let's say Mr. Peter Price have rented out his flat at the back of his house for 2,000 Rand a month. And then we also insert rent income. So the description is rental. Let's rather say cottage 45 Wilger Street is where the specific house is. There's a period from and a period to. So it was actually rented out for the full year. The original market value, let's just see. Okay, it's not necessary for you to actually put that in. However, for record keeping again, you can put that in. So let's say that cottage cost R1 million. The market value now it is 1.2. For keep it safe for future if you want to actually sell it as a capital gain. The balance in income you don't have to put in. Interest rate and insurance. Let me just see. I just want to cancel it. Just give me a moment. Design income. Okay, let's use this information anyway. The income that you received, I mentioned, is 24,000 Rand for the specific year. The interest that you paid on the bond amounted to, let's say, 10,000 Rand. So you will see automatically the profit and loss will decrease to 14,000. Rates and taxes is 1,000 Rand. Insurance is 1,000 Rand. And then repairs and other expenses, there's a drop down or not drop down, a box that you can actually put in the specific repairs for each month and the other expenses, each and every other expense included. let's say in this case, there's no other expenses or repairs. So there's a rental income of 12,000 Rand, and we say it is we can save it. Just bear in mind, if you are married in community of property, you will only be taxed on 6. So we save it, and there's a local rental income of 12,000 Rand listed in your income, and automatically it will calculate your taxable income accordingly on the right hand side of what you should pay or not. Okay, so we actually did cover rental income, use of motor vehicle. Let me just show you, if you are a commission earned or a independent contractor, you should not use the travel calculator for claiming against allowance, but in production of. So in this case, let's just add 3606, which is commission earned. I'm just gonna say 10,000, let's say 100,000 Rand, or 3616, independent contractor of 100,000 Rand. But in this case, we're gonna cancel that. I'm just actually showing you the two options. Now, if we go to the travel deduction, we then gonna use the left-hand corner, the left-hand side of the calculated information. So in this case, we are driving a VW. So it's a VW, and we're driving a Polo. Year model is, let's say, 2016. Registration is a low WP. Date acquired, actually, you've got the logbook. Cost price is 200,000 Rand, and it's been, all the information on the vehicle details have been inserted according to your knowledge. The running cost now, opening kilometers as indicated in your logbook, very important, is 10,000 kilometers, and the closing kilometers is 20,000 kilometers. So the distance traveled is 10, but because you are a commission earned or independent contractor, the business kilometers is 9,000 kilometers. So now 90% of your tax being paid will be claimed against according to the fuel, repairs, license, and all the other information you provide, or the client taxpayer. So, for example, and that is very important, for travel expenses incurred in the production of income, SARS do not accept only a logbook. You should indicate fuel, repairs, license, all expenses for the year. So that means you have to keep every fuel slip, or actually, in the case if it faded out, just make a photocopy or keep it on a spreadsheet or everything for a tip, because SARS may come back, especially in these days, to ask for the logbook and petrol slips when you are getting audited for your tax return when submitted. So they will require the fuel, the repairs, the license, other, and wear and tear you can actually work out yourself because wear and tear is that your car actually depreciates over 5 years. So automatically over 5 years, the 200,000 Rand vehicle should have depreciated by 40,000 for the year. And the fuel and oil, let's say for the 10,000 kilometers is 15,000 rands worth of fuel. Repairs is a service of 2,000. License is 800, and other is none. So you can see the running cost is 57. So for a percentage of your logbook's kilometers travel will be claimed against the 57,800. So we can just, let's say, save this, and automatically it will pull through to the main screen. It actually will be included in the travel because of that it's more than one vehicle actually for the information supply. So if we move on a little bit further, travel allowance, cheap accommodation. I'm not as sure of how cheap accommodation works because none of our clients have provided us information for cheap accommodation that they actually received or paid. So I will say to actually relate to the tax calculating notes for the best explanation, but I'll just go through it and see if I can make out what is going on. So cheap accommodation, the field will appear. Benefit is provided on a bona fide business purpose other than obtaining a tax benefit. Residential accommodation, so you can actually just choose which is the one related to the actual accommodation that you are claiming, or for description what it's for. So last year's remuneration, rental paid by the employee, numbers of room rented, and the total taxable value will appear on the right hand corner, and you just say save. But as I say, you can most probably go through the notes yourself, user guide, and then might get more information relating cheap accommodation. That's if it's applicable. So if we go to the next capture, or shall I say line item that needs to be covered by this user guide, is a capital gain. Now, a capital gain can be a certificate that you received also from your broker relating Allen Gray shares that you sold, or on the other option is a residential property that you sold, or a building that you sold that's not a residential property. Then the 2 million Rand law comes into place, and all this information is embedded in a calculation, and it automatically calculates according to the information provided that you've inserted. So if we look at capital gain, you click on the tab and this tab will appear, which is the calculator of the capital gain. The description, let's actually do Alan Gray for this exercise. Alan Gray, date purchased. You have, this is very important, you have to put in a date, although it is not necessary for the specific date, but the field on this tax planner should not be empty, then the calculation does not work. It's very important. So let's say we purchased it the 1st of August 2018, and the date it was sold, as you can see, it's created to be red, so you have to actually insert it, and we sold it on the 15th of January. Proceeds have been 20,000 Rand, and the base cost that we bought it for is 10,000 Rand. So the net gain and loss, actually the net gain is 10,000 Rand, but because that it shows the primary residence is the 2 million Rand rule been taken into account, but it is not a primary residence, and as you can say, it's a financial instrument, listed, unlisted, or none. So in this case, we're going to leave it as none, and we're going to save it, and then you'll see a capital gain of Alan Gray have appeared with this actual total that is taxable, but in this case the 40,000 rule also relates to, and no tax on capital gain will be charged and levied in this exercise. Just bear in mind, if you, let's say in the capital gain, you have to edit it. Let's say if you have made a mistake, let's say in this case you sold a house, let's say Alan Gray Street, number 32, and you sold the house for 8 million Rand. You bought it for 4 million Rand, and it's your primary residence. Then it will automatically take into consideration 2 million Rand off the 8 million. So it's 6 minus the 40,000. So it's actually then 5,960 minus the base cost, and on top of the 3 point odd, that's the balance of the amount outstanding, the capital gain will be issued and listed. As you can see on the right hand corner, capital gains taxable is 1.4, which automatically the calculator of TaxPlanner will calculate for you. So it's no need to actually go and calculate it. You just actually need to insert the information that's provided to you. So in this case, we haven't inserted the tax yet. Now, if you look at your IRP5 that you have received, you will see all PAYE that you've paid is listed on your IRP5 on the right hand under, I think it's, I can't remember the code now, but under tax, we will say we add, and it will show under code all the information provided that you need. So in this case, it's PAYE that you've paid, and on that 200,000, you have paid, let's say, 50,000, and you save it, and automatically the 50,000 will pull through to the tax box, and you'll see on your right hand corner the amount tax paid is 50,000. So now the tax due by you is 536,000 rand. That is because of the reason that the capital gain is so high. But now, actually, let's say you have paid provisional taxes for the capital gain that occurred, or that you would know that occurred during the year, that you've calculated more or less 500,000 rand that you will have to pay according to the capital gain. And this is like a provision. You add another line in the tax box, and we haven't, in this version, we haven't made a line item for provisional tax paid yet. So in what we use actually is just the PAYE again for the provisional. We are working on that, so to actually being released in the next version. So let's say you've worked out and calculate for a 500,000 rand tax to be paid towards the capital gain, and as you can see, it increased the tax paid by 500,000, so only due by you is now 36. So just to actually give some feedback on that again, if you have paid provisional taxes for the client or the taxpayer, then you insert it on the tax box or the tax box on your face as PAYE, just for now. It's still a work in progress for the specific provisional payment made by the taxpayer in August and then the February as well. So now Mr. Peter Price have paid 550 of his 586 that he received for the year, but he has on the sideline received income from a business as well. Now, if you go to your drop down boxes, there will be a business income calculator that you actually can click, and the drop down box or the box that you have to fill in will appear with all the categories and explanations of what amount according to the expense or what will relate to. In the block, as you can see, it's assets and liabilities, which is your balance sheet. But now, because of your business income, it's not the asset or a liability. So you would like to create your own profit and loss, which actually is also, you can say here in the description, the sideline business is sideline business. Okay, So you want to do the profit and loss of that. And here you can actually add and change as you wish. Let's say commission and the dotted block. And there you can see income, and you have to add it. Then the income description will be sales, for example, and an amount of 200 rand, 2000 rand. You can say okay and close, and you'll see that specific. Okay, but you just need to, I don't know why, but edit. And let me just see if you can. But yeah, you can actually add and delete as you wish on that block. So you sure you want to delete? Yes, let's just delete it. And profit and loss on your expenses side, you've got in your business, let's say accounting fees of 200 rand, and you can add it all in one, say all your expenses, and list it under other as an expense. Let's say add again as under other, and it's 50,000 rand. Let's say the expense. You say okay, that's all your expenses included. And let's say the sales that you've just created, there's an amount which you should add of 200,000 rand. So if you say okay and close, that 200,000 is your income and the 50 is your expenses. So it will indicate that there's a net profit of 150,000 rand. Now you can actually just close it, and it will automatically pull through also as an income, as a business income, sideline business of 150,000 rand. Now your tax obviously will increase as the 150,000 rand that you received from the business, no tax were paid on. So tax due by you increased to 103,000 rand that is owed to SARS by yourself according to the tax paid and the tax payable. So now the other thing on the tax note user guide is actually lump sums received. I'm actually not too familiarized with the lump sums received as well, but we're going to work through that. So if we go to lump sums, it's also the lump sum will be indicated what type of lump sum it is and how did it, let's say, how did you get the lump sum? Have you withdrawn it? Did you retire? Is it by death? So in this case, let's say Mr. Peter Price, although he's just 36, have withdrawn, he can't retire from Alexander Forbes. He received a lump sum amount of 20,000 rand. Previously allowed, disallowed nothing. Transferred is nothing. Directive number. TARS would have provided you with a IP5 with the directive number at the bottom right hand corner, which relates to the specific lump sum received. So let's say in this case it's 1, 2, 3, 56790, and you will see a description at the bottom which says lump sum withdrawal. The lump sum amount to be taxed is 20,000, calculated as follows: lump sum transfers for, it's just the information as actually provided there. You save it, and then a lump sum for Alexander Forbes have been received by, and it's 3901, which is the code that will be indicated in your certificate that you've received from Alexander Forbes. So that is more or less all the calculations in a nutshell. Okay, there's one more actually that I see and pick up now. That is the use of a motor vehicle. Now, the use of a motor vehicle is when you actually uses the company's vehicle and you get like a benefit, fringe benefit towards that vehicle. So in this case, in the description, yet again, must just add the specific car that you're actually gonna drive. Let's say description is a BMW. The registration, has it got the maintenance plan? It's actually exactly the same as the layout in source, otherwise it won't link up. So the registration number is CY in Belleville, CY. Let's say Bell WP. Bell WP. Vehicle make is a BMW. Vehicle model is a 116i. Vehicle years is 16. And cost. So as you can see, it's exactly the same print on format as normally that you've inserted in the source calculation on source e-filing. It's 20,000 Rand. Closing is 25,000 Rand. Business is 3,000 kilometers. And then taxpayers' private use of expenses, license, and maintenance costs should also be included. And then you just say, as you can see a fringe benefit of 84. So the deductible value which automatically calculates is 5,400, but that it does automatically according to the information you provide the program. So if you say save, all the information has been provided there, and you can actually then, let's say, print it, then you can see how the vehicles, so maintenance, no closing kilometers, business kilometers, deductible, how they actually get to that figure, the formulas already embedded in the program. But let's say for sources, if they require any other documents for supporting documents, you can actually just print this out and provide it for them. And let's say save. And there you can see a right of use of motor vehicle 3802. There's an amount also that's been received as income that's been taxed on, and also the deduction of the specific vehicle. So in this case, all your information have been inserted now, and you can go and tell Mr. Peter Price his liability at SARS is now 120,000 Rand. There you can see a lump sum of 20. This workings will indicate all the information that you've inserted on the face of the information under Mr. Peter Price financial information. Now, to provide a report to indicate the 119,000 Rand that is due, you actually then just click on the report tab at the top, and it will then show you all the reports that you can actually require: a retirement fund, time logged, cheap accommodation, everything that you inserted, you can actually then request as a report. Say for instance, medical aid, if you've got medical aid, and in this case Mr. Peter Price, so you can just print it, and it will show you the medical aid which you've paid 120. The employee's medical, it will work out exactly the medical sections 6B and 6A, what the credit that you've got, how they work out to get zero of your tax B. So you can actually just issue that report under reports. But in this case, we want to see the taxpayer's report. So we're going to print it, and it shows all the information that you actually have inserted in the face. The normal income of 200. Oh, sorry, let me just zoom out a bit. First of all, let's say the lump sum of Alexander Forbes receives is 20. Your income, normal income is 200. Commission earned is another 100. Allowances, travel allowance 24. So all of this, it takes into consideration to get to your total of 1.58, which includes the capital gain. And as you can see, they do work out, or you can actually run a separate report for the capital gain, how the program, which is TaxPlanner, has calculated it. So if the deductions, you've got the Old Mutual deduction, you've got the Toyota deduction, write-off motor vehicle, your investment income exemption. So, and on the next page, it will then work out tax before the rebates, medical rebates, and then tax after rebates, plus your capital gain, less exemptions. So you will actually then get an income, less all your deductions that's listed, and your taxable income is 1.8 million Rand for the year. So it automatically works out tax on the 1.8, as you can see, is 45%. So your marginal rate on the right hand side is also 45, but before rebates it's 37, and after rebates you can see you only pay a tax rate of 35. So in effect, all your deductions has saved you almost 10% of tax. Thus, your total tax payable is 669, of which you paid 550,000 Rand, and the total owed is 119,065. That you can actually save as a PDF, and you can actually then just forward it to the client to see what his liability will be, and then the actual interface of, if he's happy with it without amendments and documents that he actually forgot to send you, if he's given his approval, then you can actually interface it with SARS, and then you go back to your face of the specific client, just to actually inform you. You don't have to save every time you do insert information. It's already saved as you go along. So that is actually also a nice feature, because your information won't get lost when you already inserted the specific information. So if we look at the interface, which I just have to say I'm not familiarized that much with the interface, I can just actually inform you that it does work, and more or less in layman's terms how it will be inserted towards SARS e-filing. So I'm actually just going to open SARS on my other side of my computer, just for, and transfer it to this, just for you, to show you exactly how and where to go on SARS e-filing to actually, let's say, get your practice registered in on SARS's website, so that the interface can then be linked to your tax practitioner's profile. So just bear a second. If you look at the SARS face of your that you just logged in, you have to go to organizations, and then organizations again, and then you'll see 6 drop-down boxes below. There's a ISV activation tab. So you click on there, and you actually, there you can see your independent software user configuration, which the first name, surname, login details is what the e-filing is. And as you can see, the ISV application, which will give you all of the companies listed for SARS's interface at this stage. So as you can see, TaxBox is listed there. In your case, TaxPlanner will also be listed as TaxBox, but your information will then occur in the other user details. So I just wanted to show you that on SARS's website. And then if we go back into TaxPlanner and close Mr. Peter Price's profile, then we get to the normal face as we started off. If you want to go to Mr. Peter Price again, you just say capture financials, and all the information will be listed at 119, as you can see. So we're just going to close that. And if we want to do the interface with SARS as well, you have to click at the options button where we started to add, and then there you can see edit, also delete this listed taxpayer in the main field. You have to click on that specific taxpayer though to edit or delete it, and then you'll see there's a practitioner's profile. So if you click on there, it will provide you with SARS profile setup, and you can see our profile, which is FinSolve, and the user is Beretta 7315. So for your case, you will insert it, and then all this information will need to be supplied for your company to actually be linked to the vendor code of TaxBox. So the profile name is more or less your company name. Let's say new hot bar, and the user, this user is now the login at SARS, so it is Herman 1234, and the login key is also Herman 1234, and you just click OK. So now you see a new hot bar, Herman 1234, has been added, and then that specific SARS profile will be linked to the, what's it called, ISV activation once you connect to SARS with that button, and all of your taxpayers details will pull through which you've completed. If not completed, it won't pull through. That is more or less how far I can go. As I mentioned, if there's any other questions relating this, you can always just email it to Matthew at taxbox.co.za. So that is it from my side. I hope you enjoyed the session, and well, if I can say this, is a little bit more wiser and understanding the program a little bit better. I'm glad to have assisted you, and I enjoyed it very much. So all the best of it, and maybe in future we'll meet again. Thank you.